Welcome to Markets Now. I'm Michelle Rourke with Brad Koima, Barlick. We're seeing livestock to the green as well as soybeans, corn, and wheat. Maybe a little bit of pressure here this morning. All right, cattle, let's start off there, Brad. Live cattle, the only place where we saw lower weekly closes. Feeders were higher. But let's talk about now that the stock market seems like it's trying to recover, how much can the cattle futures recover here since they've been in lockstep?
It's a great question. Good to see you. Thanks for having me on. I'm going to have one of those struggling interviews here this morning because, if it were not for the need to feel like you need to sleep with one eye open, keeping an eye on the macros, the impact or lack of impact or whatever, the interpretation of the latest news relative to the tariff and what that means to tariffs and what it means to our economy and how the stock market's responding to it, et cetera, et cetera. And there's a very direct correlation between what the stock market does and what the cattle futures do. Cattle futures and crude oil, like 85% correlation or something like that between, they follow whatever the last move is on the stock. So if I could eliminate that macro part, but I can't because it's real. Obviously, as I just explained, it has everything to do with what the cattle does. If you could tell me that, okay, the stock market's going to calm down, it's going to just be steady, that'd be a miracle, first of all. If we were in that kind of an environment, I could give you a pretty bullish scenario for the cattle. The supply is very, very tight. The north is extremely current. And as you've heard me say, as Iowa goes, so goes the market. We continue to be nice and current and don't have a big supply of cattle here. And we're in between crops of cattle now, too, where the yearlings are largely cleaned up and the calves aren't fat. People think I'm maybe nuts or that I fell on my head over the weekend, but I don't think we've seen the highs on the cash cattle yet. No, okay. That's assuming that we're not going to have some kind of, frontal wreck in the stock market. But so with that in mind, I guess, I think that we could get, if the high's 215, I guess I just said I thought we were going to get higher than that sometime during May. So we shall see.
So my follow-up to that is the funds are still long 119,000 contracts in live cattle, but they shed about 25,000 as of last Tuesday. So do they continue to hold their long position as long as the stock market goes up, or did they use the strength as a liquidation phase?
Pull out my crystal ball there, total open interest down over 80,000 in the last 5 days. We've lost a lot of players. And I would guess that the fund position is smaller probably than that too, and it catches up to real time. I'm guessing, like always, but from experience, the long speculator, the fund manager, they don't like uncertainty. Okay. And I got a feeling that we've probably lost a round of these, the longs again. The natural long, talking about a packer, he seems to have abandoned our futures market as well. You can see that from where the basis is. The declining open interest is not bullish. Whether you like the funds or don't, you need them because they're the propellant in the rocket, right? That's a little troubling to me. I think that for that reason, I think the basis is going to get wider and wider. That doesn't mean that we can't still have some pretty good markets here, but I would say with all the uncertainty that if I was a fund manager, I'd probably be on the sidelines as well.
Yeah, this has been a cash-led rally, though, for all practical purposes. We were down last week on cash. Futures still at a big discount, as you point out. What do you think cash will do this week? And where do you see the cash market? You said you think we're going to see a cash high coming up here. When?
We have this is an old timer's statement. We have a short for a long this week. We've got a short bye week for a regular kill week with no markets on Friday. And I'm sure the packer will want to wrap stuff up earlier this week because of Good Friday. That usually is higher cash. As I wish I could tell you where some of these packers are going to try to gear up just a little bit. There's a number of packers. I'm not going to mention names, but I've really, pared back their kill schedules. I got to be thinking they got to be getting a little bit through that. They can talk tough all they want to about cut and kill, but most of the big ones have a union contract that requires so many hours, and so I don't see these guys paying these people to stay home. And you know, as we get closer to turning one more page on the calendar, you start to get into that, that better demand time. Weather improves, Mother's Day, Memorial Day, et cetera, et cetera. So I'm going to go out on a limb and I don't know. If you'd asked me Friday, I'd have said cash would be lower this week. This morning, I'm feeling a little bit better about it. I'm going to say steady better on the cash. I didn't think that the South, I thought that they traded quite a few cattle at 204, but then they started to bow their neck a little bit on Friday. So they seem to show a little more resolve early this week. Let's hope that maybe that gets us something going.
Okay. Well, we only had a 564,000 head kill last week, so let's hope we can get a little bit bigger numbers. We do have a cattle on feed report out on Thursday. Last month was very bullish. What do you expect in this month?
Well, for the first time, I think you're going to have an increase in placements, at least in some states like Texas, for the first time this year, as the effects of the screwworm border closure is starting to wear off. But by most standards, still going to see a very light placement number. But you might say it looks negative because it's more than 100, but we got some catching up to do there. As far as the rest of the overall thing, if the marketing figure isn't pretty good, I'd be shocked. We're finally into this where there's less on feed, so it is what it is. I don't know that it's going to be a game changer to the market. I doubt it very much. I think the bigger deal is going to be what's the last notion on what the stock market's doing.
Yeah. So the hog market had a higher weekly close last week. We shrugged off the China tariff news quite easily. So does this market have some more upside to it, you think?
Seasonally, it's the right time of year to like the hogs for a little bit. Pork product's been a little bit problematic here the last while. We can't seem to get off of square one now. There's been a couple of days last week where I thought, hey, here's that algo that likes to trade recession, and when they do, they buy hogs and sell cattle. With the idea that someone on a budget is going to buy more pork, right? Price conscious recession type thought. That pork is a recession proof, and probably with some merit to that logic. So I'd like to think that there's a little room to the upside here. I mean, even in tough years, we usually get summer hogs to $100. Obviously, the dynamic of what's going on with the tariffs is very important. I would say this, that the last while, China has not been that monster export partner that they had been for a while. They seem to have their herd back together, building these apartment houses to farrow them and everything in. So I think that they've actually they're getting more self-reliant, which also means they need to buy some feed, though. So we'll see how that pans out from us. But I'd like to think the hogs could bounce a little bit more from here. Usually we do going into May.
Gotcha. All right, so let's deal with the grains separately. First of all, corn setting back today, probably with wheat. We've also hit like 62% retracement. So we got to get through the next level of resistance here, don't we?
Well, yeah, and check out the calendar, folks. I mean, I don't want to be Debbie Downer here, but we sometimes rally in April, right? Sometimes you make a seasonal high in April. I guess I'm just trying to raise awareness here a little bit. The beans, for instance, rallied like 75 cents from last week, Monday. So I don't know. Everybody wants to trade a drought. Who doesn't, right? I mean, if you catch it. But I would gently admonish everyone that it's about a 1 in 8 shot, that the weather is significant enough, maybe too wet, usually too dry, to impact price. So 1 in 8, there's your shot. And I've seen the drought maps and all that rest too. So I'd be a little careful here. In terms of the old crop corn, to me, there's a little bit of a stalling here. I'm not crazy about the basis. I'm not crazy about the fact that I still see piles of corn on the ground in northwest Iowa. So I'm not as rammy bullish as maybe some of the other analysts that you're going to have on here. We'll see if we can, actually take July corn much above this $5 level or not. I think that's kind of your first magical step, and then 520 is huge, of course, above us there. So we'll see. Don't crazy about the way the spreads are trading either today. That's not a great sign. Beans is a real wild card because of China tariffs.
Yeah, it is. But yet we rallied last week in the midst of the escalation of the trade war. So what's pushing that? Is it lower acres? Is it Brazil basis levels going up, or are we just unwinding corn bean spreads? What's going on?
I have no idea. How's that for an answer? I'll
No,
try
that's
to.
okay, because I have talked to a lot of people, and obviously soybeans kind of defied odds last week.
It starts probably at the beginning of the week last week where we're cheap. Okay, it's easier to rally a market that doesn't have a lot of value, right? I mean, when you're sitting down there like we were, that's part of it. Part of it is, I think, too, the obvious play where it makes way more sense to plant corn based on the insurance stuff than it does for beans. So there's that out there. And maybe behind the scenes, this biodiesel deal, that is a pretty significant thing that's going on there. So maybe there's something like that. We've added quite a bit of capacity to the crush. There's a couple of new plants that came on here, one particularly north of us here a little ways that's got a huge appetite for beans. So that's part of it maybe. But I guess, frankly, I was still surprised whenever you get the propaganda and the headline news of where we're escalating everything with China and knowing just how much grain we sell to them. I guess I've been impressed that we've been able to handle that and not trade that part of the news. Although I would bet the first time we're 20 lower, I bet that's what everybody will be chirping about.
Yeah, although it's more a new crop story than old crop, because we're not going to sell many more beans old crop to China anyway. So
no, because they're going to get it all from Brazil like they always do. You're right.
All right. Thanks so much for joining us. That is Brad Koima with Koima Varlick and Markets Now.